Okay, Dr. Mel, we get started with another awesome training of the lessons, and we we gonna lean on you for the disclaimer,
All righty.
um, as well as the quiz. Over to you.
All right. Good evening, everyone. Let's start with our disclaimer. Futures and Commodities 101 Trading Group disclaimer. Trading and investing carries a high level of risk. You could lose some or all of your investment. Trading commodities or any other financial instrument may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means you alone are responsible for your actions in any trading or investing activities.
Awesome. Thank you. Dr. Mel, I think we had one or two quizzes. Are you able to grab those?
Yes, we did. And yes, I can. Okay, so our first quiz question, and this was a good one. When a bottom formation starts forming on the chart, this indicates that the market is possibly starting to bottom out and change directions. The trend could be changing from a downtrend to an uptrend. When the bottom formation is confirmed, this means that the market has tested resistance and traded through it. This confirms that the trend has indeed changed. True, false, not sure. And let's read it again. When a bottom formation starts forming on the chart, this indicates that the market is possibly starting to bottom out and change directions. The trend could be changing from a downtrend to an uptrend. When the bottom formation is confirmed, this means that the market has tested resistance and traded through it. This confirms that the trend has indeed changed. True, false, not sure. And let's not all answer at the same time. I'm not getting a true, false, not sure. Are we in the chat? Okay, we have Jamal. He says true. Anybody think anything different? You can unmute and talk.
One is not sure.
Yeah, anybody not sure? John Cheatham says true. Anyone not sure?
Mm.
And someone on iPhone, that could be Steve, says true. Okay, so it looks like the trues win. Yay! So the answer
Yeah.
is true. Okay, next quiz question. And there was a chart, and the chart was December cotton. It says December cotton made a bottom formation. I have been watching for market to confirm that it's indeed a bottom formation. Did the market confirm? Should we be pulling up this cotton chart? Or can everyone see the cotton chart on the Telegram chat?
Mm.
What would you like, Delvin?
Well, I left the I left the chart naked, bare, clean on purpose to see if everybody was it. But you think we need to pull it up? I'm thinking we do.
Okay, we could pull it up.
And is is the chart in the Futures 101 group?
Yeah. Is the quiz, all the quiz questions are in the Futures 101.
Okay, hold on.
Here it is. There we go. So here's the chart, everyone. Okay. And the
Oh,
question is December cotton made a bottom formation. I have been watching for market to confirm that it's indeed a bottom formation. Did the market confirm?
Yes,
No, yes, not sure.
I would say yes. Looking at it, it did a 1, 2, 3, and then it broke it broke resistance past it too.
Yeah, that's a good assessment. Anybody see anything different? Who's speaking to me right now?
Oh, before was John.
John Cheatham?
Yes, ma'am.
Okay, thank you, sir. Anybody think anything different from looking at this chart than what was just explained? Okay, so we get, no one thinks anything different. Okay, excellent. I agree with John. He did an excellent explanation of what we're actually looking for on a chart for bottom formation being confirmed by the market. Yeah. You agree, Delvin?
Absolutely. I'm just curious again if there anybody that's not sure about that. But yeah, I definitely agree. Anyone not sure though?
Yep, speak up, you guys. If there's anybody not sure when they look at this chart of what was just explained about the 1, 2, and the 3, and then the market confirmed by trading through the number 2 area of resistance. Okay, so no one's saying they're not sure, Delvin. So apparently
Yeah.
everybody's in a good place. And by the time we get to question and answer, if you're at the point where you're not sure, but you didn't say anything, you can ask then also. Okay. All right, so let's go back. Okay. And so for those of you that may be new with us this evening, this is our manual that goes along with this class. And we always recommend that all of the class participants, if you can, purchase a copy of the manual, either hard copy or paperback, or you can get it digital as well, because it's a wealth of information in the manual, and our classes coincide with the manual now as far as when we do our teachings on Sunday evening. So Delvin encourages everyone that takes the class on Sunday evening with us to get a copy in whichever format works best for your studying habits. And we have a retreat coming up. Woo woo!
Yeah.
Oh,
Yes, we
Woo.
do. From
Oh, my
April 30th to May 2nd, 2026. It can't get here soon enough, can it, Delvin?
it cannot, man. That's my favorite event of the year. I can't wait. It's
Yeah,
time to spend time with everybody, and you know, we get the chance to get really deep into some real good training. But then we spend time together and you know, get some bonding going. But I can't wait, Dr. Mill.
I feel honored tonight. We got John Cheatham on board with us. John was at the first retreat, correct, Delvin?
Yeah.
Correct.
Yes. Oh my goodness. He made me so jealous. I haven't missed a retreat since.
Yeah, I say I got picking things back up. I'll be coming to this I'll be coming to the April
Awesome.
30th. Yeah.
Awesome. Looking forward to seeing you, John. Excellent. And everybody's welcome that's on the platform. And even family and friends that may be interested, by all means, encourage them all to come out.
Yes.
All right. All right, Delvin, all yours. You can see the screen?
Yes. Let's dive in. I see the screen. And I think we're doing top formation now. We've been talking about the bottom formation for the last 2 weeks. It looks like the series of risk management for the 1, 2, 3 top. And we actually have 3 formations that we watch for. The sideways channel, the 1, 2, 3 bottom, and this one right here, the 1, 2, 3 top. So the 1, 2, 3 top formation is definitely a formation we want to pay attention to and understand. What really I want you to understand about the top formation is that it's it's an opportunity to take advantage of the market trading to the downside. And we talk about all the time that we can trade the market in both directions. And that's what the 1, 2, 3 top allows us to do. We get a chance to trade the market to the downside. And it's basically the same as the bottom formation. It's the opposite, complete opposite. When we go long, that's the bottom. When we go short, that's the top formation. So let's look at this determining a plan. And it's almost the same as that lesson that you already went through on the bottom, but it's gonna be a little different because now we're just doing it from the other direction. But we want to know contract size, like we talked about already. We want to know tick size. We want to know the current price. The current price sometimes can be named or called the last price. You know, when you're looking at the price of the market moving and trading, you'll see it may say last price, but it's the current price. Same thing. Okay. Entry price. That's our entry price. Well, we got filled at. Well, we entered the market. We want to know where we entered the market, where we got filled at. Very important to know that. All right. Now our exit price. We know that's just as important because we want to know where we're getting out of the market. Where did we get out? If we did get out. But most important thing is what is the exit price? How do we find or determine what our exit price is going to be? The target, our target, and our target is determined by using what? 50% retracement. We went over that already multiple times. Our 50% retracement allows us to have a target when we enter the market. We know exactly what we want to see the market trade to. Our 50% retracement is our target. And that's very important to know. All right. So price fluctuation of average daily moves. I want y'all to know everything that we're talking about always goes back to those rules that we talked about in the very beginning. The rules always come right back. Pretty much everything we train to talk about. You know, risk management is one of the ones that we highlight the most when it comes to the rules because risk management is something that is actually labeled as the number one reason most people lose money in the market, not having proper risk management. And we try to give it a lot of focus to help you not be in that situation. All right. Anything you want to say on this slide, Dr. Mayor?
Oh, no. You covered it well. I don't have any additions.
Okay, 1, 2, 3 top formation. 1, 2, 3 top formation is a formation that indicates that what the market could be starting to trade in a downtrend. The downtrend means that when we look at the chart, the market's been trading in the uptrend and has reached the area where it's starting to make a top. It's hit an area where it doesn't want to go any higher. It's starting to make a top, and we call that our 1, 2, 3 top formation. So we look at the chart and we see where it's traded to the highest price on that chart, and that's going to be what? Our number 1. The number 1 is going to be the highest price on that chart, and we able to locate that. Our bar chart helps us to find the highest price on that chart. Looking for what we call the half moon, but they help you find it when you go look at a chart. All you have to do is look for that half moon, and it'll point you right to the highest price on that chart. And then after we find our highest price, we see the market trade away from the number 1, and that's going to be E for time, because it's going to trade the opposite direction from the number 1, which will be meaning that the market's going to be trading down, and then that's going to be our number 2, which is the most important number out of the 1, 2, 3, because the number 2 is the price that we enter the market using. Our entry into the market is using the number 2. All right. Market trades away from that number 2. That number 2 is support in this particular situation. And as the market trades back up towards that number 1, but it doesn't exceed the number 1. It actually starts to trade back down. We can get our number 3. And that number 3 is a very important number, but that's another support, another resistance, and that's going to be what we use for our exit, meaning when we get into the market and we put our entry for our order to get into the market and we get filled, we're going to have what's called a stop loss. Our stop loss is going to be using that second resistance level, which is our number 3. Okay. Most important thing to remember is that 50% retracement is how we have our target. That's what we find and use the 50% retracement to come up with our target. Anything you want to add, Dr. Mel? How am I doing?
Yeah, you're doing great. I just want to stress, every time that you look at a chart and you want to assess a chart, the first thing you want to do is your 50% retracement. Whenever you look at a chart, and we prefer that you start on a 6-month time frame chart, because that's the chart that Delvin prefers to trade off of. And so he does all of his initial workups on a 6-month chart. And the first thing we do is we locate the 50%, because it makes no sense to label your number 1, your number 2, and number 3, and the market has already reached its 50% by the time it's made its number 2. So, and you don't know that until you mark the 50%. Then you start looking for where your 1 is, your 2 is, your 3 is. So remember that. In that order, your 50% is the first thing you want to mark up on every chart.
Excellent. Okay, we have a scenario of a 1, 2, 3 top formation, which Dr. Mel always like to point out that some people may not see it unless they're looking at it, visual learners. So this is going to be a scenario we're going to walk through. You got to picture it in your mind, but we'll have an example showing you from a visual standpoint, okay? So 1, 2, 3 top formation scenario. Again, remember where we would enter. We would enter below the number 2. The number 2 is our entry number that we use to get into the market. So that would be a sell limit order because this is a top formation. So that means we are going short the market. So we sell first when we going short. So our order would be a sell order to go short. And we would place that order right below the number 2. Our stop loss, remember, that's our number 3 that we just talked about. Our stop loss would be above the number 3, just above that resistance. And that will be a buy order. We sold to get into the market. We're going to buy to get out of the market. So our number 3 will be a buy limit order. Okay. And that 50%. Dr. Mel is talking about our get. We want it to be below the number 2. It should be below number 2. It's not going to be a situation like Dr. Mepper said, where it's already been obtained, it's already been reached. So it should be below the number 2 because we want the market to be trading to the downside. So we should be trading toward that our target. Okay. Hope this makes sense to everybody.
Your internet connection is
Anything you
being
want to
challenged.
add, Dr. Mel?
Yeah, your internet connection is being challenged a little bit. So for everyone, hopefully you understood what Delvin said, that you enter the market with your trade below the number 2 with a sell limit order. Your stop loss is going to be set above the number 3, and that's going to be a buy limit order. And your target, where you're measuring your profit that you're going to gain in the trade, that's going to be set at your 50% level. And a 1, 2, 3 top formation, that should be below the number 2. So your 50% should be below the number 2 because you're looking to trade where you enter at the number 2 and gain profit below the number 2 at your target, which is your 50%. So don't forget, if you sell to enter the trade, you have to buy to exit the trade. And there's only 2 ways you can exit a trade. Either the trade is going against you and it's hitting your stop loss for you to exit the trade, or the trade is going in your favor and you're profiting and it's hitting your target and you're buying at the target to get out of the trade. So when you're entering a trade for a 1, 2, 3 top formation, you have to remember you're trading the market in a short position or in a sell position, and so you get in the trade with a sell limit order. But to get out of the trade, you can do that only with a buy order to exit the trade.
Yes. Thank you, Dr. Mel. So can you hear me now?
Yeah, we can hear you.
Okay, the risk management formula. So we want to calculate the stop loss. Stop loss is going to be the number 3. So the number 3 subtracted by the number 2 should give you your risk exit. Again, the stop loss, which is the number 3, subtracted by the entry, which is your number 2. That should give you your risk exit. Calculate that profit, which is number 2, minus the 50% retracement. Remember, we're trading down to the 50% retracement. We enter at the number 2, below the number 2. trade into the 50% retracement. That's our profit from our entry below the number 2 down to 50% retracement. That's the profit that we made on the trade. So you want to calculate this risk to reward and make sure that it's a good risk to reward for us to enter the trade. We never want to get into a trade with a bad risk to reward ratio. Anything you got, Dr. Mel?
Yes. Always remember, when you calculate your risk to reward, you would prefer to have a risk to reward of your reward is 2 times greater than your risk, or 3 times greater than your risk, 4 times greater than your risk. So it should be 2 to 1, 3 to 1, 4 to 1. You try your best not to do a 1 to 1 where you're risking as much as you're profiting. You always should try to have at least twice as much profit as you are risking to enter that trade.
Yeah, exactly. The trade has to make sense, right, Dr. Mel?
Yes, it has to make sense. If it doesn't make sense, it's not worth the risk. Because you have to remember, you're risking actual finances every single time you take a trade. So it has to make good sense. And that's why we go through risk management formulas. And also remember, you look at this math, yes, it's simple math, and you're like, wow, this is a lot. Every time you evaluate a chart, evaluate the possibility of a trade, this is a lot of work that I got to sit with pencil and paper and a calculator. I'm saying to you, there are different tools on bar chart, and you will learn with time. When you start clicking on the different tools and figuring how they work, you will realize there are tools in bar chart that does all this calculation for you. All you have to do is click on the chart and the numbers, enter the tool, and it's able to do this math for you, so you could do it quickly, and you're able to really enjoy trading.
Yes. I'm so glad you pointed that out, Dr. Mel. I was going to ask you to give them some words of encouragement that they don't have to figure that part out. Oh, nice. Okay, dynamics of top formation. We heard it all night. 50% retracement. We want a confirm 1, 2, 3 top formation. We always wait for our confirmation. It's the safer way to get into the market. We want to see the market confirm first. And what is it confirming? It's confirming that the market has definitely changed trends. The trend has turned around and now the market's trading in a different direction. So we want to see the market establish a trend. And how do we establish a trend? We establish a trend by seeing the market have a certain number of hits on the trend line. You know, as it may say right here, they touches, same thing that I'm referring to when I say hits. I want to see the market have those hits on the trend line. This is how a trend is established. Always remember the definition of a trend is established by seeing the market make higher highs and higher lows, or lower highs and lower lows, depending on if it's a downtrend or uptrend. Confirmation for the trade allows us to know that we can get into, we can now feel comfortable to get into the market. We have a confirmed 1, 2, 3. Our order's been placed, and once the market has been confirmed, we can now safely get into the trade. Makes it a little safer way to get into the trade. Let me say that. Say it that way. Okay. And now we want to see market test that tool, trade through it, giving us our confirmation, and our order will be placed just below the number 2. And it's a top formation, just below the number 2. That's where our entry level our order to enter the market would be at. Anything you want to add, Dr. Mel?
Nope, we covered it
Okay.
all.
Right. If we got any examples, okay.
Yes, we do.
And we lean on your eyes, Dr. Mel.
Okay. Okay, and that's perfectly fine. So here we have a chart of December corn 2025. And if you look at the bottom of the chart, you see where it's a 6-month chart. Because right down here. Can you guys see my cursor moving on the screen?
Mm-hmm.
Okay.
Yes.
All right. I'm circling the
Yeah.
6 month. Excellent. Thank you. So I'm circling the 6 month. That's in blue. So that's how you know what chart we're in, as well as the top right here next to the word daily, it says 6 month. So that's how you can tell what time frame you're looking at on your chart. And so when we look at this chart, we're seeing the half moon up at the top. And we're seeing the market is making a lower low, a lower high, a lower low, another lower high. And you see it consistently making lower lows and lower highs. And that's an indication of a downtrend. And so when you first look at this chart, you don't have all of this information in this area right here. Okay. The only thing that you may have is pretty much right here. Everything else is future, and we don't predict the future when we look at our charts. And so the number 1 is the highest point on the chart where the half moon is. Then the market travels, travels in a downward position, and it forms a number 2, a possible number 2. Then it travels away from the number 2, but it does not exceed the level of the number 1. And then it turns and goes down again. And it challenges the number 2 position. When it goes down again, it leaves behind what's called a number 3. When it leaves that number 3 position and it challenges the number 2 position, if it goes lower, if the market price is lower than the number 2, that tells you the number 2 floor or help somebody.
Support.
Support. Thank you. See that? Who just answered? Was that you? It was you, Delvin?
Yes.
Oh, I thought it was a student, because I said, I know we got some students on here that can teach this. So yes, the support. When it challenges the support and it trades through the support, that's telling us that it has confirmed the number 2 position, and the market indeed has changed directions and is now going in a downtrend. Okay. And so that's the 1, 2, 3 top formation. Once it has challenged the level of support of number 2 and traded through it. And it continues to do that all the way down until the market decides that it wants to change trends again. It makes number 2s, which are lower lows, number 3s, which are lower highs, number 2s, lower lows, number 3, lower highs, and it continues to do this all the way down. As you can see, there's a 6-month 50%. That's on the chart. And so where you enter at the number 2 in the trade, your stop loss is set above the number 3, and your exit or your profit is the 50%. So from where you enter below the number 2 to the 50%, that math is the profit that goes into your broker's account as a gain. If the market turns against you and travels in the opposite direction and exits at the number 3 level, which is your stop loss, that goes against your brokerage account as a negative, meaning you've lost money in the trade. But you've controlled your losses by setting a stop loss in this area, because if you had not set a stop loss, you would continue to lose money from your brokerage account because there's nothing to protect your finances. And that's why a stop loss is important. Never trade without a stop loss. Back to you, Delvin.
Awesome. And in this particular case, Dr. Mel, we see that we actually traded all the way down to the bottom of this chart
Mm-hmm.
and started to make a 1, 2, 3 bottom formation.
Yes, it did.
Yeah, meaning that the market didn't want to trade any lower, and now it started bottom and make the 1, 2, 3 bottom that we've been talking about for the last couple of weeks. But excellent. That gives everybody a visual of what we was just talked about over the slides, previous slides when we were going over the scenarios. So now you actually get to see it, what it looks like. And this is shorting the market. I mean, you're trading the market to the downside. And in this particular case, the 1, 2, 3 top formation. Awesome. I hope everybody got that. Hope everybody understood that. And if you don't understand it, just know that you may be someone who decides they never want to trade the market down. You may want to trade the market to the upside, but we just want you to understand what it looks like to trade the market down, because it just gives you another opportunity to take advantage of. So hope everybody was able to get some definitely clarity from this. And if not, we're gonna make sure you get it.
Yeah. And we have some time to go to our live chart. You want to go to our live chart?
Yeah, let's do that.
Yeah, because this is the end of the slide. So let's do a live chart.
Did you have one in mind?
Yeah, let's go to the infamous oats.
Okay.
And when we go to my charts, because I know everything's in black and white when we teach, when we go to my charts, you're going to see things a little bit differently. You're going to see red and green candles. And so you get to come into my world a little bit this evening. And I think that's expansion for everyone. And I don't want you to get confused at all. Okay. But I'm going to bring the oats chart all the way here so that you can see what I see. Okay. So when you look at this chart, and this is oats December 25, and when you look at the bottom of the chart, okay, but I am on, see right here, you can see the 6 months. So this is a 6-month chart, okay? And this is the half moon, Can everybody see the half moon? And so this half moon signifies a number one position. Then the market trades downward. This area right here. And that becomes your number two position. Then it trades away from the number two, but doesn't go past the number one. And that becomes your number three position. And you're saying, well, Dr. Mel, where's my 50% retracement? Okay. And so you are looking at when this took place. So when this took place, this was the lowest part on the chart. This was the highest part on the chart. And let's see where the 50% would be. Your 50% would be right here. Okay. And so remember we said just now in class, the 50% retracement needs to be below the number two, where you can actually, because you're going to enter the trade below the number two. And your 50% retracement has to be down here somewhere where you can travel to gain profit. But your 50% retracement is right here at the number two level. So would this make sense to take this trade if your 50% is right at your number two?
No. No, ma'am.
No, it would not. Because there's no room for the trade to breathe and for you to gain any profit. Okay? But when you look at what this trade did, okay, you're like, well, Dr. Mel, look at this trade. It kept going. And you're like, it made another number two. And so that you guys know, you notice how I'm clicking on all these things and producing things on the chart from the tools that are here. This is how I learned. I looked at the people that taught the classes when I took them, just like you're taking them with us. And when they clicked on a tool, I learned how to use the tools by watching them click. And so you're actually doing the same thing with us tonight as we're doing live charts, working up. And so as you continue to see, this continued in a downtrend and you're like, oh, wow. Okay. My 50% was at the number two when I worked up the chart, but the market has made a 1, 2, 3. It has traded through the number two. Well, what other way can I tell if the trend has changed, if I can make some money on this? Well, one of the things that we taught you tonight was how many times does it hit the trend line? So you pull out your trend line and and you lay your trend line. And you start counting how many hits are on your trend line. And one of the things that we were taught is at least 3 hits on the trend line. Correct? And if you look at these trend lines, you're seeing 1, 2, 3. Over here, you're seeing 1, 2, 3. So you're seeing at least 3 hits on the trend line, either on the top or on the bottom of the formations that we've taught you. And so that's giving you another indication that the market is changing and going in an opposite direction from where it was going before, which was in an uptrend. Okay? So you have to look at everything that we're teaching you. A lot of times when you're learning something new, you want to compartmentalize things. But when we're explaining to you a 1, 2, 3 top formation, this is what you look for. You're looking for a different amount of touches on a trend line. Because what you're trying to assess is the market going in a certain direction? And so we're giving you clues of how you can tell which direction the market is going in, because always remember, the trend is your friend, and you always should be trading in the direction of your friendship with the market. And whatever trend it's in, that's your friend. You shouldn't be trading in any other direction at this point besides where the market is, the direction the market is trading in. And so these are some of the ways that you're going to, find the clues. And so at this point, at your level, if your 50% is here and it's at the level of the number 2 and there's no way to trade, we would always say to you, at this level of your trading career, find another chart, work up another chart where you can progress. Once you enter the trade, it can progress to where you exit the trade at profit at the 50% retracement. So this would not be a trade that I would recommend that you start at, because the 50% retracement is right at the entry point. And there's nowhere for you to see the market progress to at this point in your learning. So let's look at another chart. Let's look at live cattle or feeder cattle, because that has really been a really nice market recently. Here's feeder cattle.
And if we have time, Dr. Mel, I want to look at the 30-year T-note.
30-year T-note?
Mm-hmm.
All right, well, let's go there since you like 30-year T-note. And that would be under financial, sir?
I think it's on the financial, yeah.
Okay, 30-year T-note. And let's see, December 25, because it has the greatest volume and open interest.
Mm-hmm.
Okay. And you're saying, how come she has a markup on everything? I don't have a markup on everything. One of the things you will notice about my charts is when Delvin posts a chart in the Telegram chat, when I was learning, every chart he posted, I would put that chart as a part of my watch list on bar chart, and I would start studying the same charts the mentor is studying. I didn't go and find my own charts. If he posted a corn chart, I studied the corn charts. If he posted a cotton chart on a question, on a quiz, or whatever he posted, I pulled that chart up, and that's the chart I started studying, started marking up. So you're like, well, how do I choose my charts? I chose my charts based upon what the mentor posted. And so I started accumulating several charts based upon what he posted with whatever he was teaching in the Telegram chat, so that you know how I accumulated my different charts that I have markings on. Okay, so here's the 30-year T-bond Delvin 6-month chart.
And what's our first thing we want to do when we go on the chart? We want to find a 50% retracement.
Yes, we do. And so we go from the lowest to the highest, and we mark the 50%. Okay, there's our 50%.
And then we find our formations that we watch for. We look and see, do we see a 1, 2, 3 top or bottom? And in this case, we training and looking at 1, 2, 3 tops. So we look and see whether the half moon points it out, right? So we
Yes.
find that moon and see if we have a number 1.
There's a half moon right here, sir. So I'll put the number 1 above it.
Okay, then the market trades down, and we now looking to see if we can have a number 2, which would be, remember,
Right
2 is
here.
going to be support. And then we look for that number 3, where the market trades away from the support, trades toward the number 1, but doesn't trade past or through the number 1. Start to turn back around. That leaves our number 3.
Yep.
Which is another resistance. Now we are waiting and looking to see if the market's going to confirm that we indeed have a 1, 2, 3 top. And how do we get the confirmation? The market trades down to test the number 2, trade through that number 2, and that's where we will have our order to entry to go short on a 1, 2, 3 top formation. But Dr. May, I wanted to talk about what you just covered on the other chart, and we wouldn't have recommended to get into the oats trade.
Correct.
Because of the fact that the 50% retracement was pretty much already reached. But how would you assess this one? Do you think this looks like a better chart for somebody?
Absolutely. And one of the tools that you would use, because remember we said all of the calculation can be cumbersome if you did it all yourself, either manually or with a calculator. This tool right here. So if you, where the number tool is, right below it, there's an arrow. You click it. It has a tool that says reward and risk. You click on that and this pops up. So where it's highlighted in blue, it says entry. So all you have to do is click where you want to enter below the number 2 on the chart, and it puts the number in there for you of where your entry. So this is going to be your sell limit order. And that's what you're going to give to the broker. This is where you want to enter the trade. Next, it highlighted the stop loss, and you want that above the number 3. So all you have to do is click on your chart above the number 3, and it will enter that number for you. Your target price is your 50% retracement. And so you just click on where you marked your 50% retracement, and it will fill that number in for you. It's a short because you're trading the market down, and it gives you a 2-to-1 ratio. So this trade, you would risk $1,500 on this trade to make $3,200. And so you are risking, you know, $1,500 to gain $3,200. And that's a 2, and it tells you the ratio right here, 2-to-1. And all you click is apply, click on the screen, and it puts the plots on the screen for you so you can visibly see you're entering the market below the number 2. To enter the trade, your stop loss is above the number 3, and you're profiting or exiting the trade with a buy limit order here at your 50% retracement. And you just click if your eyes need something a little bit larger, like mine's do from time to time. You just click on these little circles and pull them out, and it makes your words a little bit larger, so easier on the eyes. But it gives you everything here plotted out, and you don't have to do all of that cumbersome math, you know, for every single chart that you're working up to see which one's the most profitable trade. Because you got to remember, you're only going to be in 1 or 2 trades at a time. You're not going to be in 5 and 6 trades, you know, and so you want to look at different charts. You want to work up different charts, and you're going to look at some charts. You're going to make, you know, 5,000 to 5,000 reward to 1,000 risk. Or another chart, you might be making 1,500 reward to 200 risk. And so you have to realize what your risk appetite is, you know, and that's how you're going to choose which one of the trades that you're going to be more of your risk appetite to be able to enter and exit, you know, with profitability.
Dr. Melba, can I ask, how did you get a 50% retracement? Because I noticed you didn't do the calculations. Is it that it worked it out for you, so you were able to draw the line?
No, I use a tool called a Fibonacci tool. So I'm over in this section right here. The second one, you click this arrow and you see it says retracement right here.
Yeah.
You click on that tool that says retracement. And you click on the lowest and you drag to the hikes. And this right here says 50%.
Oh.
Like on this tool, like see where the orange is? I'll bring it down. See, it says 50%. So wherever this line is, that's where your 50% would be. And so I just drop a horizontal line on top of that on my chart, you know, and put it in whatever color I want to put it in, and I know that's my 50%. So I can flick through my charts and I know all my 50% are purple. And so that's how I know that's my 50% on that chart. But that's
so what?
how you,
Right. So to remember again, you go here to the left. You look for replacement. Retracement.
Retracement.
Right. And then when you click on that, you go to the lowest point.
You click and drag. You hold it and drag to the top, to the other half.
Right.
Let go of it. And then where it says 50%, you just drop a horizontal line there and color it whatever color you want to color it. And that's your 50%. And then you can erase this. And you just click it and hit delete, and it disappears.
One more thing, how you get to draw the lines?
This line here?
Yeah, right. What tool do you touch to get the lines, to draw
this first arrow right here above? You click it, and these are all your lines, either vertical, horizontal, ray, trend lines. These are all your lines. So you want a horizontal line, you click on that, and it drops. You right click on the line, you hit the gearbox here, and you can change your color to whatever color you want. You can click to how much thickness you want, or how thin you want your line, and you just click apply.
Right.
Okay?
You're right.
Excellent. Any other questions? Because we're in the question and answer section now. Correct, Delvin?
I've got a question, Dr. Mel, please.
Yes, go ahead.
So, you know, on the other chart where your 50% retracement was very close to the number 2. I've not seen many charts like that. So I was wondering, where is your limit? Do you have to consider a risk to rewards? So how far away does your trend line need to be to the number 2 in order for you to say, yeah, this looks like a good trade?
Okay,
Is there a
the
limit?
one with, yeah, with that chart that I had up before, that was an excellent example that I wanted to show of there was, when you work up a chart and you do the 1, 2, 3 formation and you mark it and you have a 50% that's right at your number 2, then as far as I'm concerned, when you look at that chart, there's no, from the strategy that we teach, it doesn't make sense to get into that trade unless you're using another advanced knowledge, you know, other than the 1, 2, 3 top or 1, 2, 3 bottom to get into the trade, because there are other trade techniques that we learn beyond this, but this is our foundational class. You've got to master the foundation for us to build on top of that foundation and teach you other strategies. And so I'm saying to the person that's in the foundational class tonight, if your 50% retracement is at your number 2, it makes no sense to get into the trade because there's nowhere for you to gain profit if you're entering at the number 2 and the market has already traded to the 50% at the number 2. And I've actually seen that before in the market where you work up a chart and the 50% is at the number 2. And I'm like, oh, next chart. I don't even pay it any attention. And although there is room, when you look at it weeks later, it was a beautiful trade and it went beyond that. Because of what I've learned in this class, I'm not willing to take that risk at that point if the market has already progressed to the 50% at the number 2 level. Do you understand what I'm saying?
Yeah, I've just never seen that before.
Oh yeah, I see it all the time. Haven't you
So
seen that,
apart from
Delvin?
maybe in a trend line, I suppose.
Yeah.
I see it all the time. When you mark up enough charts of all the different commodities, sometimes you will see the market leave a number 1, go to a number 2, and it's already at the 50%. And you're like, whoa.
Yeah.
Mhm.
See, we're not saying that it may still not end up being a profitable trade. We're saying that
Right,
there's a
right,
much
right.
higher risk. It's a very much higher risk that we're not willing to take, you
Correct.
know, and sometimes it could work out like the chart she showed you. It may work out in your favor, but in a lot of cases it doesn't. So we don't recommend taking that risk, and you don't know if it's going to work out in your favor. The 50% retracement is already pretty much have been already obtained, so it's not a trade that we prefer to take.
Okay,
Yeah.
so then my next question would
Does that
be,
make sense?
is there a gap level then between the 50% and the number 2? Is there a minimum, maximum? Is there?
Yeah, we're saying 2 to 1.
2
Just
to
like
1.
we showed
Okay.
you on this trade where it was
Yeah.
2 to 1.
Yeah.
Yes. We prefer yes. In our foundations right now, we prefer you do 2 to 1 or greater.
Right.
Yeah. Yeah, that's
I think tonight is the first time I've actually understand better the 50% retracement, because I've been trying to figure out what we needed for and know how you'd work it manually, but I wasn't quite sure. Now I understand that is where you're going to exit the trade. That is the amount of profit you're going to be making on the trade.
Absolutely. Absolutely.
Yeah.
That's what your 50% is. Your 50% is cha-ching. That's putting money in your bank or money in your brokerage account from your trading, yes, on these charts. Absolutely. So you want to be able to see that some space there for the market to actually, for price action to take you to the 50%, whether you're trading in an upward position or trading in a downward position. Your goal is to get to your 50% because that's how you are profiting in the trade. Yes, ma'am.
Yeah.